Hello and welcome to Connect and Collaborate. I am Alex Hopkins, your on-air producer, and I am honored to have Bernadette Johnson in the studio with me. Bernadette is the Vice President of Market Intelligence at Drillinginfo. So how are you doing today?
Good. How are you?
Wonderful. Thank you so much, and thank you for joining me.
And Happy New Year.
Yes, Happy New Year.
Can't believe it's already here.
2019, it hurts a little bit, doesn't it?
It does. I can't write it yet. Every
Right?
time. I'm not ready yet.
I feel like it's not until about March
Yeah.
that I feel comfortable with the new year.
Yes.
But it happens every year, so I'm still cyclical.
Yeah, that's right. That's right. We're just a little off. We're a little lagged. Yep.
Exactly. Yeah. Just, it's like jet lag.
Yeah, it is.
Yeah.
It is.
Well, Bernadette, we had you on about a year ago with Drilling Info, and a lot has changed for you guys. And so I'm excited to talk about everything that's going on with Drilling Info and how that name may bring up a connotation that's not quite right for what you do. But before we get there, let's talk about you and your background and how you ended up at Drilling Info.
Absolutely. So I'm an economist by training. So I went to school, Colorado School of Mines, for undergrad and grad school. So I'm local to Colorado. What I do at Drilling Info is the same thing I've done for the majority of my career. My expertise is energy markets. So that's oil, that's gas, that's renewables, everything that's energy. And I focus on predicting the future. So what is the price going to do in the future? What is supply going to do? Demand. What does that mean for Colorado and local communities? Or more macro, US or even global. So how I got started, I started at Bentech Energy back in 2000s, and I came into the industry at a really interesting time. So this was the beginning of the shale revolution. So many people have heard of it now, but this is 2006, 2007, where things are changing, where this new technology unlocked all these resources of oil and gas that we never had before. It was horizontal drilling, multi-stage fracturing, these buzzwords that you hear, but this was the beginning of it. So I came in, I worked for Bentech Energy. They were a basically data and analytics company, and I was tasked with regions. And so we looked at mid-continent regions or Northeast and predicting what was going to happen. At the same time, the whole industry is changing. So I came in, that happened, have been doing it ever since, so have basically worked my professional career all the way through that shale revolution. And everything that I do, I work for oil and gas producers, but also utilities, landowners, government agencies, capital markets, so private equity groups that are buying or selling assets, everybody that's engaged in energy and that cares about it for some reason, ultimately cares about it because of the price. If the price is for crude, if it's $50, it means one thing for an investment. If it's $100, it means something completely different. So no matter who you are and where you are, it impacts maybe your utility bill or your big investment of a power plant or your ability to invest in wind generation or whatever it looks like. Those are the types of questions that I answer and have answered pretty much for my whole career.
Wow, that's an impressive slate that you have there. For as large as it is, it's not just oil and gas, it's energy.
It's energy, and it's whatever, however that changes over time. So if it used to be primarily oil and gas, and if it's power, primarily coal, that's changed quite a bit, even in the past 10 years, and it's going to keep changing. And so that's exactly right. It's everything that feeds into that. If maybe it's geothermal energy, it can be all these other things that we don't necessarily think about, but all play a key role in the market.
Wonderful. Tell me this. You talk about the future, right? So today and moving forward. I don't think you have a crystal ball.
I don't, not yet.
Okay, working on that. But so how do you get this information? Obviously, history repeats itself, so I imagine there's some past digging that you do to look at future earnings and potential.
Exactly.
So yeah, walk me through that.
So I focus on fundamentals. So what are fundamentals? It's really supply and demand. What is supply doing? What is demand doing? If demand for oil, gasoline, and diesel is growing, you need a certain amount of supply to meet that need. So that interaction between supply and demand is what dictates price. So that's Econ 101, but that's really what it is in a nutshell. So if we're going to change the cost to drill a new barrel of oil because of the shale revolution, that's going to change the whole supply curve. It's going to change how high the price has to be for us to meet a certain level of demand. So that's a simplified way to look at it, but that's what we do. We track drilling trends. How much does it cost to drill? How much does it cost to produce another barrel of oil? How much does it cost to produce another MCF of gas? What does coal production cost look like? On the demand side, we're going to track how is demand growing? Are people driving more? Are they driving less? Are they using natural gas to heat their homes? Or are they using fuel oil, like in the Northeast? Or is that mix changing? Are they using a lot of a lot of hydrocarbons or oil and gas actually goes into the creation of plastics and rubbers. So when you think about growing economies like Asia, so China, India, or South America like Brazil, as those economies grow, as those countries develop, they take more energy, they use more plastics and rubbers and all of these things. So we think about that. We start with supply. What do you get out of a barrel or an MCF of gas? Where does it go? Who needs it? And what does that trend look like? So that's what we're doing. We're piecing those things together, and we're saying how they interact is going to dictate price. How are they interacting? So what does that mean for the price?
Right. As far as countries that can produce, when we take into account natural disasters that happen and can maybe shut down some production or being able to dig or things like that, how much do you have that margin in play for your predictions?
Sure. So we track all of that. And I would say it's hard to quantify exactly, right? So I can't predict exactly how much capacity Saudi Arabia has to produce oil. And I can't necessarily predict what they are producing tomorrow or the next week or even today, right? Because we can't see what the inner workings of that country. That's true with a lot of countries. We can't predict necessarily black swan events like a Saudi Arabia-Yemen war or the collapse of Libya 10 years ago, right? We can't predict those things. What we do know is that there is always something that happens. I can't tell you where it's going to happen or when specifically, but we know something's going to happen. So what we do is we track all those events historically. We look at, maybe it's Libya. What did Libya used to produce? What did they produce after the collapse and the ouster of Gaddafi? What are they producing today? What's the situation look like on the ground? So what do we think they're probably going to be able to do in the future? And so it's that, but it's for every country that's a meaningful producer. Saudi Arabia, right? We're listening to what are they saying? How are they leading OPEC? What types of decisions is OPEC telling the market they're going to do? Are they going to cut oil? Are they going to add oil? How are they going to manage the price? We're tracking all of those different pieces. We're interpreting it, and we're saying, does this data point, this piece of information, does it jive with what we know from data that we're getting? Does it jive with what other consultancies and other groups are saying or other international agencies? We piece that all together and we say, this is what we actually think is happening. This is what we actually think it means for price. So there's no precision, I would say, with it, but the more that you do it, the better you have an idea of what can Saudi Arabia actually produce. What can Libya actually do? Why are the factions within Libya fighting? What are they fighting about? And what does that look like today? So I would say more than anything, because we don't have perfect data for all these countries, it's experience. It's talking to people that have contacts in those countries, and it's figuring out what can they actually do based on what they've done historically. Does that help?
Yes, that you're clarifying so much for me. Yeah, that's super interesting. So I imagined at first that your job was a lot of sitting behind a computer and running analytics, but you have to really be on top of current trends and news and all of that, right?
Exactly. So it's certainly sitting behind a desk and reading and digging through data, but a lot of it's also reaching out and talking to contacts and figuring out what other people are thinking. It's a combination of all those things. I think you get the best intel about these things that are a little bit opaque, that we don't have perfect transparency into, by talking to people. You're never going to substitute that, especially when you're talking about oil markets. Natural gas is a little different. And the main reason is oil moves pretty slowly, right? It takes a month to move a tanker from the US to Asia. It actually takes a month for a barrel of crude to move from Canada through a pipeline down to the US Gulf Coast. It takes a long time. So the market doesn't move quite as quickly. Natural gas is different. Those molecules move faster. We know we have a lot more transparent data. So we know the US is almost a closed system. We know we have a pipeline grid. They're interstate. There's federal regulations that tell us and mandate they have to post all kinds of data every single day. So I can tell you today, 6 times a day with 6 different cycles, how much gas is moving through a specific pipe, how much is being delivered to this power plant, how much is coming out of the ground from this producing well. Natural gas is different. Like, I can see today what's happening, and it's a lot easier, it's a lot cleaner. That data is just more robust and transparent. Crude's a little bit different. So it does depend on what we're talking about, but yes, it's a mix of all that.
Yeah, awesome. I'm fascinated by this. This is not something I ever really considered. But let's move into talking a little bit more about Drillinginfo and everything that you guys entail. Again, we mentioned Drillinginfo. Sounds like drilling. It sounds like you only deal with oil and gas, but as you've mentioned several times, you're in the energy spectrum completely.
We are.
Let's talk about Drillinginfo and a little bit of their background and what they do.
Sure. So, Drillinginfo, what are we? We're technically a software as a service company. So, what do? We offer software solutions, data, we scrub data, we put it into software for people to use to answer questions. Now, Drillinginfo, the business actually started focused on drilling info, like oil and gas drilling, production, rigs. Since then, we've grown quite a bit. We're over 1,000 invoice. We are processing those invoices. So that's what financial automation looks like. We've acquired companies that are focused on the mineral space. So what does that mean? It means you and I are landowners. We have mineral rights underneath our land. We own the rights to those minerals, and we are receiving a check in exchange for companies developing our oil and gas, or it could be coal, it could be anything. Or it could be they're paying us because they laid a pipeline through our land and they need to manage it. So that company is focused on mineral rights. So that client base looks a lot like you and I, landowners getting checks, leasing our land for the purpose of energy. Maybe they're putting a windmill on our land, right? So it could be lots of different things. So we have that business. We have businesses now, or parts of our business, that focus on kind of predictive analytics, like machine learning or AI, those buzzwords you're hearing about. At our core, we're taking lots of big data, whether it's financial invoice data or oil and gas production data or economics. We're taking all this data. We're creating software products so that people can take that data and understand what it means for their business. So maybe it's a government agency that's taking our data, using our software to figure out how much oil and gas can the U.S. grow next year. And that's a real exercise. We have customers that are doing that. The EIA is one of our biggest customers. We have utilities that are taking that data and trying to figure out, maybe it's like Excel, and they're trying to figure out, I need to generate power. I need to move power to homes so that people's electricity works. What's the price going to be? How am I going to fuel that power? Is it going to be renewable, or is it going to be natural gas fired power plants? They're answering all these different questions using the tools that we create.
Wonderful. So I would imagine your clients are bigger companies then.
So, and that's an interesting question. So, definitely bigger companies. And those are the ones that are easy for me to kind of give examples for. But we have a lot of clients that are actually smaller, like just landowners who are trying to understand, maybe I have land and I want to lease my land, but I need to know what does that market look like? What are my neighbors getting for their land? What does the production look like for the wells that are getting drilled? What can I expect to receive from a check? How do I know when I'm being treated fairly? We have some of those clients that are just individual landowners signing up for services or consulting for us to help them answer those questions. So our clients actually range from individuals all the way up through very large oil producers, utilities, government agencies, and everything in between.
Wonderful. Again, something I never thought about. That's awesome. Let's talk a little bit about the national look at oil and gas and energy in general. So we know that we just had midterm elections. We have a lot of new administrations coming up across the states. And a lot of these new leaders are really looking to turn more towards renewable energy rather than sticking with the oil and gas and the natural gas. So let's talk about that and how that impacts your business.
Sure. So, and that for us, that's a piece of the puzzle. So we certainly have oil and gas data. We also have a lot of other renewable type data. So one of the sectors that we cover is power. And so power generation, how do you generate power? You can generate with renewables, you can generate with oil and gas, you can do a lot of different things. So we track all of that. Now, what does it mean for nationally at the national level? I think the trend, even before the elections, was pushing more renewable, right? Renewables were growing as a part of the overall energy mix. Natural gas was also growing, actually. Oil still growing. Coal was declining. That trend is still continuing. Certain states more than others or faster than others, but it still continues. So this push towards renewable, in many ways, I would tell you that it was driven by the market, not necessarily politics.
Okay.
And the market usually wins. Like we change leadership, we change who has control of the House or the Senate or even at the local level. We change all of that, but eventually the market wins. Whatever the best source of energy is, will contribute to the mix. And that's what we've seen over time, historically. So that push was already happening. It's continuing to happen. It may get a little bit more encouragement from certain states or localities or even at the federal level. But certainly, we're tracking all of that. We're building wind farms. We're building solar farms. We're also increasing, actually, natural gas production and natural gas fired power generation because You can't control when the wind blows necessarily. You can't control when it's sunny. So what we know is natural gas, because of how flexible it is, and it's the cleanest fossil fuel, it pairs really well with renewables. So when it's not windy or not sunny, you can fire up a natural gas power plant very quickly. It's very reactive. You can't do that with a coal plant. You can't do that with a nuclear plant. So those things actually go together. So when you think about renewables growing, you also should think about natural gas growing. And what we see is that when you have a project for renewables, you also have a project for natural gas very near to it. So those are all things that we track, and that obviously plays a role in what will power prices be, what will natural gas prices be, do we need to produce natural gas and move it to meet that demand. All of those things are things that we're tracking.
Nice. So we know here in Colorado that we have some of the stricter regulations
We do.
on oil and gas, and some of the strictest in the country, I believe, if not.
We do, especially for methane. So think about methane release from oil and gas wells. So ideally, you want to capture everything that's coming out of your oil and gas well. But Colorado has stricter rules that say you need to be even more on top of that. You need to install all the infrastructure on the surface to make sure there are no leaks. And you're right, we are the strictest in the nation when it comes to that.
Yeah, so that being said, on a national platform, we don't have a whole lot of set regulation federally.
We don't.
Yeah.
A lot of it's state level. It depends on individual states and how they treat their own oil and gas.
So what kind of trends do you see at Drilling Info from one region to another?
So I think we're generally pushing towards being cleaner, meaning even producing oil and gas cleaner. And so the rules in Colorado, in many cases, are used as examples in other states when they're trying to figure out how should they regulate their own oil and gas resources. I would say it still varies. Texas, for instance, a little different than Colorado politically, and you see it. But even them, they're transitioning more towards cleaner, greener. We're going to recover all the natural gas instead of just releasing it to the atmosphere where it increases fossil fuel. It increases carbon emissions and all the bad things we know about that for climate change. So Texas is a little different. Then you shift gears and you're in the Northeast. What does it look like up there? They're relatively new to producing the amount of natural gas that they do, right? Pennsylvania, Ohio, West Virginia, their production base, it's now a third of the natural gas production in the U.S. It's huge. And it pretty much started with the shale revolution. So it happened within the last 12 years or so. So they're 12 years old trying to figure out how do you manage this industry. And a lot of times they're taking what we've already learned in Colorado or maybe Wyoming or even Texas and applying some of those same rules up in the Northeast.
Awesome. Okay, so I would imagine that some people have to look somewhere else for people that have already done these regulations.
And what works and how do you incentivize? I think the hard part is when you think about it from a business standpoint, generally everybody has the same goals, right? If you're an oil and gas producer, do you want to lose a lot of your natural gas to the atmosphere? No, you do not, because every time you lose it, that's dollars floating into the atmosphere that you don't want to lose. So I think it's easy for the media or for other people to kind of look in and say, oh, well, we have to regulate these bad actors. In many cases, most companies are not bad actors. The bad actor is the exception. Everybody has the same incentive. You want to be safe. You don't want to have injuries for PR because these are your employees and you want them to be safe. You want to recover everything that you're investing into. The same goals that the state has are really the same goals that the companies have. So I think that's also something that's interesting to keep in mind that sometimes gets lost in translation. That if I'm Anadarko or Noble and I'm a big producer in Colorado, I don't want injuries, right? I don't want events to happen. I want to recover my oil and gas. I want to sell it in a safe way. Those things are true. So we generally see, even when states come in and figure out how to regulate, the rules that we have here, the rules that we have in Wyoming, they're pretty easy to adopt because people get it. It makes sense. A lot of times they were created in collaboration with the industry and what is technically feasible from an engineering standpoint. How do we do this? And we've already gone through that step. So we can take what's been learned here and kind of spread it all over the country.
Wonderful. Well, I would assume that one of the things, because we talked about how you're in the field of predictions,
yes,
essentially. So I would imagine that when states or companies get to a point where they're producing more than they've ever produced before, as whether that's in the renewables or oil and gas, whatever that looks like, that they run into some maybe issues, right? If we've never been in this basket before of how much we're producing, what do we know that we don't? What don't we know that we don't know?
We do. I think the bigger issue with that is, so Colorado's a good example. We are hitting record levels of production every month, right? We are producing more than we ever have before. With that, if we've never produced this much, we probably don't have the infrastructure to handle it. So we need investment. We need projects to help it along. We need pipelines. Pipelines get a lot of pushback now, I would say more than ever before, but pipelines remain the safest way to move oil and gas, or pretty much anything. You need processing plants to handle the natural gas. Nothing comes out of the ground ready to use, right? Even natural gas, there's other things in that gas. You have to separate the heavier carbon, like the propanes. Propane comes out of the ground in the natural gas stream. Well, we know you can't just take the gas stream out of the ground, put it in your grill. Bad things are going to happen.
Yeah.
Right? So we have to process it. Same thing with a barrel of oil. You're not putting crude oil in your car. We're taking that crude, we're taking it to a refinery. They're pulling out all the pieces. They're separating the gasoline from the diesel, from the heavy fuel oil, from the waxes and the tars for like roofing or roads. They're separating all that out. They're selling it into individual markets, and people are using it. So when you think about that, it's one thing to produce oil and gas. You need rigs, you need infrastructure at the wellhead to like pipelines to bring it out, but then you need refining, you need processing, you need markets, you need all these other things that go along with it. So when you think about record levels of production, in Colorado that's true. It's also true nationally, right? We're producing over 11.5 million barrels a day of crude oil today, up from 5.5 million barrels in 2005, right? That's a huge growth. We've more than doubled because of the shale revolution. With that comes the need for everything else to handle it, to process it, and then to actually use it. So those are the things I think that sometimes lag behind, or things that people don't really have line of sight to what that means. That means jobs, that means construction, that means growth in infrastructure. It means all of those things, certainly in Colorado, but Texas and all over the country.
Yes. So one of the things that locally, going back to local here in Colorado, again, we have the strictest regulations in the country. Yet we have people pushing to be even stricter. I think one of the things that they were looking at back in 2018, obviously Proposition 112 did not pass, and that would essentially shut down oil and gas.
It would have.
Yes, absolutely. But one of the other things that I think went unnoticed was, instead of being 1,000 feet from school entrances, now they want to be 1,000 feet from outdoor areas such as recess areas and things like that. And so I as much as that's an additional 500 feet, but it does make a difference on the market itself.
It definitely does. And I think what I come back to is Proposition 112 didn't pass by a large margin, right? For a time, the polls said it was closer. We get to actually vote, and it's not really close at all.
Yeah.
And so the biggest thing with that is the rules that have been proposed, even the rules that are being talked about today by our leadership and governor, they're pretty arbitrary. There is no science behind 1,000 feet. There's no science behind 2,500 feet. There's really no science between 500 feet. So the problem is, 1,000 sounds good, right? 2,500 sounds good to certain people, but there's no science behind it. That's not meaningfully any safer or any more dangerous. And so that, I think, at its core is the problem. A lot of times these rules are developed because whoever wants to push this, maybe keep it in the ground agenda, no more oil and gas agenda, they look at it, they say, well, 1,000 feet would pretty much shut down the industry. And 1,000 feet, that sounds logical to your average citizen.
Right.
That sounds reasonable, so let's try for that, regardless of the fact that it's not based on science. And we're saying this as, we don't have a horse in the race. We don't produce oil and gas. We don't produce power. We are third party, unbiased. And when we look at it, we want to look at, what are the rules actually, what does the science say? What would be safer? What's the right answer? And in Colorado, nothing that has been proposed is science-based. That's my key takeaway from it.
I love that. We're having a fantastic conversation. Stay with us here on Connect and Collaborate. We'll be right back. Welcome back to Connect and Collaborate. Once again, I'm Alex Hopkins, your on-air producer, and we are having a wonderful conversation with Bernadette Johnson, Vice President of Market Intelligence at Drillinginfo. And so I kind of want to just jump right back in. So
absolutely, yeah.
We ended the last segment talking about Proposition 112 and how it lost by a big margin.
Handily lost, yes.
Yes. But you mentioned that, again, as a third party company to this. You don't have any political ties. You aren't an actual investor of oil and gas, right? There's no ties for you to have. So either way that it would have went, really would have had no effect on you.
It wouldn't. I think it only would have had an effect on us because anytime something is unknown, right? Anytime the business environment is riskier because there are unknowns, then we actually get a little busier because people want to know, Bernadette, is this thing going to pass or not? If it does pass, what does that mean? If it does not pass, what does that mean? So I think what you said is pretty accurate. No matter way you slice it, if it had passed, if it had not passed, wouldn't have changed our business.
Right.
Would have definitely changed our client's business and did generate a lot more interest in the meantime while we were helping people understand what it meant.
Absolutely. But that being said, you've made a very good point that there is zero science behind the 2,500 feet pushback. There's zero science behind even 1,000 feet.
Exactly. And so that's the key for us, is that there have been multiple studies that have shown that oil and gas production, when done the right way, is very safe for neighbors that are very close. So the difference between 2,500 feet or 1,000 feet or anything, there is no science supporting any of those numbers. It's political or it's special interest groups that have their own agenda. For us, that's the key takeaway. And like you said, we don't have a horse in the race. We don't produce oil and gas. We don't own power plants. We don't have any of that. So what we do is we provide data, advice, analytics to help people understand, no matter where you sit in the industry, what do these things mean for you? And for us, when we were helping educate people, what does this mean? What happens either way? It was all about that. There is no science. Certainly would have been impactful for Colorado. If we had passed 112, new drilling would have pretty much been shut down. Would have been a huge deal for local budgets, right? You think about that. Oil and gas pays a lot of tax. Royalty owners, the landowners that own royalty rights, they receive a lot of checks. They spend that money in the community. There's a lot of jobs that are created and continue as a result of drilling. So things you don't think about even. So oil and gas operators certainly, but also electricians, plumbers, welders, all these other industries that directly impact oil and gas. So all of those things would have been impacted. So for us, that was the bigger story, that we could be doing something that's not science-based, but it's going to have real implications to state budgets, local budgets, jobs, industry health, how Colorado is positioned from a business risk per standpoint compared to Texas or Wyoming. Like, those are real risks that once you do something like that, you can't reverse.
Exactly. And I, for one, am super glad that did not pass. I'm pretty pro-renewable, right? But I think we have a unique stance here in Colorado that we are able to access all of the above energy.
We are. Colorado has a lot of oil and gas production, but we also have a lot of renewable, a lot of wind, a lot of solar, a lot of renewable growth, so a lot of new projects coming in. All of those things are true. So we have Colorado as a snapshot within the country. We have a pretty well-rounded energy mix. And so, like you said, I think everybody at a high level is pro the environment, right? We only have one Earth. We all live here. We all have the same goal towards the environment. How various people approach it is obviously different, but yes, I mean, Colorado, we're highly regulated. We do it the right way. Our companies comply. We don't have bad actors. So we have a relatively small knit group of producers that are active here, and they're not what we would call bad actors. That's the exception, not the rule. And alongside all that oil and gas, there is a lot of renewable. There's a lot of projects going in. A lot more of our power generation and what we're using for electricity at our homes is coming from renewable sources. All of those things are still true.
Yes. You mentioned bad actors. I'm going to change gears a little bit on you here, but one place that we see some bad actors are in the cybersecurity realm.
Absolutely.
You're dealing with data, you're dealing with analytics. I imagine that you guys have quite a large footprint in the cyber world.
We do. We
Yes.
do. So we're a software as a service company, right? So everything we deliver, there's a cyber component to it, and there's security risks that go along with that. So we have a group within our company that focuses on that. And so they lose sleep at night trying to plan for and protect against anything that could happen. We've been really fortunate that nothing like that has. So we focus on that a lot. I would say for our clients, it's an even bigger deal. Because if you think about it, our clients are running power plants, are producing oil and gas, are running pipelines, are running and operating a lot of the key infrastructure for the whole country. And so with them, it's meaningful. So their cybersecurity focus, I think, is steps ahead of where we are just by nature of what they do. But yes, that's a good point. I mean, every day it gets a little bit trickier. The bad guys, so to speak, are always trying to get in, right? They're steps ahead. They know the technology first, and it's on everybody like us and our clients to really stay ahead of that and keep power plants running and pipelines running and data safe and people's information safe.
Yes, absolutely. Well, and I know that your clients, I mean, thinking about it again, a lot of those power plants are run strictly electronically, right? And so if somebody hacks that mainframe, you're looking at livelihoods lost.
It really is. I mean, you think about it, power plant, that doesn't sound like such a big deal, but maybe it's Phoenix in the summertime and it's 120 degrees, and having access to air conditioning, we know like there can be a loss of life if there's a disruption to that, let alone the economic fallout. If there's no air conditioning, Phoenix would grind to a halt, right? I mean, you couldn't go to work. It'd be like when a hurricane hits Houston. Like those things would be as real and as impactful as these natural disasters that happen that we can't stop or predict. So definitely, everything that we're dealing with, we think of energy. Energy is the largest global industry, right? Everybody cares about energy. It takes energy to run pretty much everything, from your vehicle to plastics and rubber creation to power plants and home heating and home cooling and everything in between. So all of these things are key to quality of life, limiting a loss of life if the worst thing happens. All of it's really key to all of that.
Yes, and I think that's one thing that gets lost a lot with people and the conversation around energy is how much it's actually around you. Yes, we have this argument over renewables versus dealing with oil and gas, and we have this argument politically, sadly enough, about it. But the fact of the matter is that our livelihoods are completely dependent on the energy industry.
They are. And when we think about renewables, well, today renewables primarily means power generation. And so, yes, some of that power generation can go into like charging a vehicle, but by and large, renewables are power generation. But if you think about a barrel of oil, there's a lot more to it than that. It's power generation, but it's also plastics and rubbers. It's any synthetic material. So think of like your spandex, that's a hydrocarbon. The veneer on this table, that's a hydrocarbon. Certainly the fuel in my vehicle that it took to get here, the rubber on my tires, again, to get here today, all of that is a hydrocarbon. And that is pervasive across everything we touch, everything we do, all the movements that we make. And a lot of that, I think, gets lost in translation. The plastic on these headphones, same thing, that's a hydrocarbon. So renewables are important, certainly in growing that renewable base. It's happening. You really can't stop it at this point. It's one piece of the puzzle, and it really impacts power generation. But energy itself is so much more than that. It's everything else that we don't think about.
Yes, and it's a huge industry, and I imagine that you guys have a large base where you have to pivot a lot throughout your day talking about these trends, right?
We do. And so the clients that we serve, it's everything from a landowner who wants to understand their mineral rights or their value of that, to people that are in the field actually operating rigs and operating oil and gas, to utilities that are taking and buying and selling that and moving it to our homes, to the capital market guys that are trying to figure out what to invest in or maybe are managing our 401ks or our pension plans. So all of those people, that's the spectrum of people we talk to day to day, or reporters or news media that are trying to get an understanding of what is the crude price going to do a month from now. So everything, all of those things, all those people or personas are things that we touch every day. So we're talking to people at a utility who want to understand the price of gas for one reason. We're talking to regulatory, maybe it's state regulators who are trying to figure out what does a 1,000-foot setback mean or a 2,500-foot setback mean. So yes, we're pivoting every single day. Good news for one of those clients can be very bad news for another client. So those are things that we balance. Again, we're third-party unbiased. We're trying to give you the right information, not necessarily what you want to hear or what you need to hear, depending on how your business is structured.
Absolutely. So 2018, again, we had you on last year, and we got some predictions from you. It was really cool. But in 2018, one thing that happened was that Genstar Capital acquired Drillinginfo. And so for the outside perspective, I would imagine that that's pretty common and maybe not big a headline news for the rest of us. But internally, kind of fun, right?
Yeah, exactly. So externally, doesn't really impact our day-to-day. So if you're not within the company, not a big deal. We basically went from one private equity owner to another private equity owner. Internally, though, it's pretty exciting. So there's a lot of things that have to happen when a big sale like that is happening. So a lot of people internally played a role. On top of that, when you get a new owner, the goal for any private equity or investor is to grow the business. You can grow the business a lot of different ways. Organically, and we're doing that. We're growing double digits. We're increasing our clients and the types of things that we're offering. But you can also grow it inorganically, meaning acquire other companies that augment what you already do and make you even stronger. So we've done a fair mix of both. So I think the most impactful thing from getting a new owner is you're starting from point zero. They're trying to grow their investment in us. And as part of that, we're acquiring lots of different things. So Drillinginfo is a different company than we were even 6 months ago. We now have the core oil and gas data and analytics and helping understand oil and gas drilling and demand and pricing. We also have financial automation business units now that are handling all those invoice payments that change hands. We have the power, load, and price forecasting groups. We have MineralSoft, which is a more recent acquisition, and they're focused really from the landowner perspective and the value of minerals. We have Market View Desktop, which is kind of like a Bloomberg terminal, which is a desktop to help you track prices if you're a trader, for instance. So all of those things today fit under the Drillinginfo umbrella. So it's funny, we hear Drillinginfo, and people hear Drillinginfo. It sounds like it's just oil and gas, but it's actually a lot more than that. We're touching almost every facet of the energy industry at this point.
Wonderful. I also want to talk a little bit because 2018 we had some predictions that you made, and we were looking at $60
WTI. So WTI is West Texas Intermediate. That's the benchmark crude price in the U.S. So when you hear about U.S. crude prices, you might hear them referred to as WTI. That's what it means. So it's a certain type of barrel, and it's a certain location at Cushing, Oklahoma. And so that's the benchmark price. So when you hear about crude prices went up or went down, that's what people are talking about. So when last year we had a similar conversation, and again, most of what I do day to day and my team does is predict pricing. We dig through supply and demand dynamics. We're trying to predict what the price is going to be because that's what actually matters. Whether you're a landowner, that price dictates what your check looks like. Whether you're a utility, that price dictates what energy you buy and what our utility bills look like. Capital markets, that price dictates the value of those investments or not. And so the price is what matters. Last year we were predicting average $60 crude price, so WTI, for the U.S. for 2018. And we came remarkably close. I think there was a big chunk of the year where prices bumped up to 70 or 75. And people were saying, oh, you're too low, you're too low. And then miraculously, or maybe not, because it was supported by the fundamentals, prices started collapsing again at the end of the year. The average price came very close to that $60 mark. So we were almost spot on. Similar thing with natural gas. We predicted a $2.85 natural gas price, hovered around there. Prices came up a little bit at the end of the year because weather was strong and there was the expectation that we're going to need more natural gas for this coming winter. Then they came back down. So that, again, that natural gas price came in very close to what we were expecting last year. This year, we're really expecting kind of similar. We would tell you that today's price, right around $50, $51 today, is probably too low. We're still expecting an average price of $60 for the U.S. for 2019. That's the right price from a fundamental standpoint. That's the price that it'd be an equilibrium price that would allow us to produce enough oil to meet demand. And that's taking into account that the U.S. is part of the global market. Right? We are exporting, recent weeks, we've been exporting over 3 million barrels a day of crude internationally. We already export 3 million plus barrels of the products like diesel, gasoline, everything else. So we are very much a part of that global market. Our price, we believe, will be $60. International prices closer to 68 or 70. On the natural gas side, again, we think the right price for supply demand is about 285. So that's what we're tracking towards. That's what we're looking at, all those different dynamics, and may adjust. But history, if history is our guide, we look at fundamentals, we pick a price in Q1, we pretty much stick with it because the market usually wins in the end. Geopolitics, like OPEC might tweet, you might see a run up in crude prices, maybe it comes back down. Those things we can't control, but the actual, how much does it cost to produce, how much do we need to meet demand, those things are relatively constant. And so that's what we focus our business on.
That's awesome. This is cool. I like to imagine that your job is a lot like somebody that's on the trade floor at the stock exchange.
It is. That's a fair analogy. And I actually spent a couple years of my career running analytics for a hedge fund. And so the hedge fund was trading natural gas and crude and power futures, so trying to predict the future of these prices. And my job was to lead the analysts and all the data analytics that supported those traders. And so yes, it's very much like that. Traders, a lot of traders are our clients. We talk to them daily. They're trying to figure out What is the price going to be because I want to trade it? We're trying to figure out what the price is going to be for all of our various clients that have different needs.
Yes, and talk a little bit more about some of those needs and what those needs look like. Again, you have some traders that call because they want to know for trading purposes. I know that you have some clients, landowners, that are just looking for information, really, what they need to know, and make sure they're not being taken, or making sure they're on top of their game. What other kind of help do you offer your clients here?
So one of the interesting ones, I think, recently was we have consulting services, and we provide those services to anybody that wants the right answer, right? So we actually do work for the state of Virginia, their state corporation commission. So they're the utility regulators. So just like Colorado has utility regulators, so does Virginia. Why do you regulate utilities? Because utilities pretty much get a set rate of return. Why? So if you're a public utility, if you're a regulated utility, you get a set rate of return. Why? So basically, they own the distribution system. They own the pipe that actually brings gas to your house. They have a lot of incentive to build that pipe out to make sure they meet the need for customers. They have a mandate to do that safely, to have enough of that natural gas or power to meet the need. You want to have power when you plug in your hair dryer or whatever it is. You need natural gas when it's cold. So they have a mandate to do that. Because of that, they also have incentive to maybe overbuild that, because they get to pass those costs on to us as ratepayers, and they get a fixed rate of return for that. So imagine a world where you got a guaranteed 14% return for your 401k. You would love that.
Woo!
But you would have a lot of incentive to put a lot of money in that 401k and maximize that.
Yeah.
They have the same incentive. They get that 14%, 15%. Sometimes it's lower, depending on the company and the regulator. But so they have a lot of incentive to build new systems, to add and invest in their system. The counter to that, so the checks and balances to keep that system running well and fairly for us as bill payers, is the regulator. So the regulator basically gets to say, do you get to make that investment? Do you get to buy that wind farm? Do you get to build this power plant? Do you get to expand your system? So they go to the regulators and they ask permission. In this case, we actually work for the regulators in Virginia. So we're the third party helping the state of Virginia understand if their utilities are trying to buy a wind farm or build a pipeline or file their integrated resource plan, which everybody has to do. We're helping them understand what's the price going to be of gas. What is power demand or load going to look like? Those are all things that we do. So that's one example of a real project that we are working on currently that's impacting everybody in the state of Virginia. We have other projects, maybe, and this is a Colorado one. Someone was trying to buy a pipeline, an oil pipeline that's in Colorado. So they want to know, how much should I spend? Is this pipeline moving barrels of oil from a supply place that's growing, or is it shrinking, right? So you don't want to buy a pipeline that's pulling oil from a basin that's declining, because then the flow in your pipeline is declining, the value of your investment is declining. You need to know those things, and those are fundamentals. So we worked on that project for them to help them understand, what should you pay for this pipe? What type of crude is it moving? What refinery is it taking that crude to? Is the supply basin growing or shrinking? All of those things are impactful for that pipeline. To do that, we dig through oil and gas producers, drilling economics, where that pipeline is, what it's moving, how those refineries are running, all the things that tie that pipeline to supply.
So supply, meaning this is going to be a real basic question, but supply as far as what's left in the ground that can be drilled out, or supply?
No, so supply of what's actually coming out of the ground.
Okay.
So there's billions of barrels of oil still in the rock, still in the ground. Billions, likely, of TCFs of gas still in the ground. So when we talk about supply, we're talking about what's actually being recovered, what's coming out of the ground, what's moving through a pipeline or through other infrastructure and is landing at an end user, at someone that's actually using it. So that's the supply we talk about. I think the common language for the stuff that's still in the ground would be like the unrecovered reserves.
Okay.
So it's down there, we know it's down there, but we don't know, it's not out yet. We're not using it yet.
Okay, so there's no way to predict anything there, right?
We can, right? So
Okay.
if you're an oil and gas producer, you care about that number. Because think about it, it's just like a mining company. If you, every day you're producing oil and gas. Well, if you have certain assets under the ground, you're producing them, you're selling them off. Every day that you don't expand that asset that's still in the ground, the value of your company is declining, right? So think of it like maybe you have a gold mine. You have a gold mine, you're mining that gold. Every time you pull gold out of that mine, there's only a finite amount in there. The more you pull out, the less it's left over, the less valuable your company is in the future. So oil and gas companies or miners, part of their job as companies is to continue, as they pull those resources out of the ground, to add to the knowledge about the resources that are still in the ground so we can continue to pull that out. So for them, we actually have a fleet of geoscientists, geologists, geophysicists, reservoir engineers, drilling engineers that help our clients that are actually drilling for oil and gas understand those dynamics. What happens when you drill a well here? How deep should you go? Which formation are you drilling into? How much are you going to produce over time, not just day one? What do you need to get for a barrel over the life of the well to break even? If it's going to cost you, if you're going to need $100 a barrel over the life of this well to drill it, today at $50, you're not going to drill it. It's out of the money. It's not economic. You'd basically be losing money forever. So those are also things that we help our clients understand. Where should you drill? Where, if the price comes down from 75 to 45, like it did, what are the rigs that should be moved? That were drilling wells that were economic before and now are not? How much production is actually available at $45 or $50? Because that changes. It's a lower number than if prices were 75. Who's impacted? Maybe it's not Anadarko or Noble, but maybe it's a smaller producer that has a footprint and they can't make money anymore. They might go bankrupt. So all of those questions are also questions that we're answering for oil and gas.
I love that. That's awesome. So one of the things, again, and we've talked a lot about this throughout the show, drilling info, it's got that connotation of dealing with oil and gas, but you do so much more. And so one of the cool things that I found on your website is that you offer an intro to drilling info. And so you have one on January 15th, and that's online, and so people can find more information.
Absolutely. So any information about the company you can find at drillinginfo.com. You can register for that webinar, and it's basically, I gave a very concise short answer about all the things that Drilling Info is, and that's a little bit more depth. What does that financial automation business actually do? What are we doing for mineral owners? What are we doing for oil and gas companies or regulators? What are we doing for traders? All those things that webinar really helps pull together. So whether you are a mineral owner and you're looking for more information about your land and what you should do next, you can look at that, get more information, reach out to us directly on the website. We have people available pretty much 24 hours a day. We have businesses or offices in Denver, in Houston, in Chicago, in Dallas, in London, in Santander, Spain, in Bangalore. So we have offices globally, and there's people contributing to the business everywhere in the world. So depending on who you are and where you are, drillinginfo.com is the best place to get in contact with us, and we can then direct you from there.
Yes, and one of the nice things too is that you have a chat that pops up right away too.
We do, and that's manned all the time. So you can get in there, you can chat, you can ask a question, and we'll figure out a way to get you the information that you need.
So when I need to ask my question at 3 a.m.,
there's someone there. Yep, they're probably at that time probably in India. If it's 3 o'clock in the afternoon here, probably in Houston, or maybe in Denver. But yeah.
Cool. I like that. This has been an amazing conversation. Any last thoughts for 2019 and where we should be, where we think we're going?
Yeah, so oil, I think all eyes are on the oil market. Natural gas, we know a lot. The market's pretty well informed. Oil is opaque, not as transparent, a little bit harder to predict. All eyes are on demand. So that's the reason that prices collapsed from 75 to 45. How much is the global economy going to grow? Are we looking at a recession in the U.S.? All of those things we're tracking every data point we get from manufacturing data and other to try and predict that. That's what the whole market is keyed into. So it's all about demand. What's the strength of our economy going to be? And obviously that impacts everybody that's listening probably in some way or another.
Absolutely. Thank you so much, Bernadette. It's been a pleasure having you on.
Thank you for having me.
Yes. Again, visit drillinginfo.com. Also visit cobrt.com/radio-podcast for this show and more. Be sure to like and subscribe our YouTube page while you're here. Have a wonderful day.